Hello everyone, welcome back to my YouTube channel. Today we are discussing the latest developments surrounding the Vietnamese dong exchange rate, a topic that continues to capture the attention of global investors, economists, policymakers, and currency market watchers as Vietnam positions itself within an increasingly complex and shifting global financial environment. In recent weeks, the Vietnamese dong has demonstrated a pattern of relative stability. Yet beneath that surface calm lies a deeper narrative shaped by multiple economic forces, both domestic and international. The exchange rate of the dong against the US dollar remains one of the most closely monitored indicators of Vietnam's economic health, particularly as the country continues to expand its export-driven growth model, while balancing inflationary pressures and monetary policy adjustments.
In the market as the
At the center of this discussion is the State Bank of Vietnam, which has maintained a managed float regime for the currency. This means that while the dong is not freely floating like major global currencies, it is also not rigidly pegged. Instead, authorities allow gradual movements within a controlled band, stepping in when necessary to prevent excessive volatility. This approach has helped Vietnam maintain investor confidence while avoiding sudden shocks that could destabilize its export sector. One of the most influential factors affecting the Vietnamese dong exchange rate is the strength of the US dollar. Over the past year, the dollar has remained relatively strong due to high interest rates in the United States and ongoing global demand for safe haven assets. This strength has naturally placed downward pressure on many emerging market currencies, including the dong. However, Vietnam's currency has shown resilience compared to some regional peers, largely due to strong foreign direct investment inflows and consistent export performance. Vietnam's export sector remains a critical pillar supporting the dong. The country has established itself as a major manufacturing hub, particularly in electronics, textiles, and consumer goods. As global companies continue to diversify supply chains away from over-reliance on a single market, Vietnam has benefited significantly. This steady inflow of export revenue provides a continuous source of foreign currency, helping stabilize the exchange rate even during periods of global uncertainty. At the same time, foreign direct investment continues to play a key role. Vietnam has attracted significant capital from multinational corporations seeking cost-effective production bases and access to growing regional markets. These investments not only boost economic growth, but also increase demand for the local currency, providing further support to the dong. Another important factor shaping the currency's trajectory is Vietnam's monetary policy stance. The central bank has taken a cautious approach, balancing the need to support economic growth with the necessity of controlling inflation. Interest rates have been adjusted carefully, ensuring that borrowing remains accessible while avoiding excessive liquidity that could weaken the currency. This measured strategy has contributed to the dong's relatively stable performance. Inflation trends also deserve close attention. Vietnam has managed to keep inflation within a moderate range compared to many other emerging economies. Stable prices reduce the risk of currency depreciation and help maintain purchasing power domestically. This stability is particularly important for maintaining public confidence in the currency and encouraging long-term investment. Global trade dynamics are another layer influencing the Vietnamese dong. As international demand fluctuates due to geopolitical tensions, shifting trade policies, and economic cycles, Vietnam must continuously adapt. Any slowdown in global demand could impact exports, thereby affecting foreign currency inflows and putting pressure on the exchange rate. Conversely, strong global demand can strengthen the dong by boosting export earnings. In addition, remittances from overseas Vietnamese communities contribute significantly to foreign currency reserves. These inflows provide an additional buffer against external shocks and support the overall stability of the financial system. Remittances often increase during times of global uncertainty, offering a counterbalance to other economic pressures. Currency market sentiment also plays a subtle but important role. Investor perceptions of Vietnam's economic outlook, political stability, and growth potential can influence capital flows and exchange rate movements. Positive sentiment tends to attract investment, strengthening the currency, while negative sentiment can lead to capital outflows and depreciation pressures. Looking at regional comparisons, the Vietnamese dong has performed relatively well against several Southeast Asian currencies, while some neighboring economies have experienced sharper currency fluctuations. Due to external debt levels or political uncertainties, Vietnam's disciplined economic management has helped maintain a more stable trajectory. However, challenges remain on the horizon. One of the key risks is the potential for prolonged strength in the US dollar. If global interest rates remain elevated, capital may continue to flow toward developed markets, putting pressure on emerging market currencies. Vietnam will need to carefully manage its foreign exchange reserves and monetary tools to navigate this environment. Another challenge is the balance between supporting exports and maintaining currency stability. A weaker dong can make exports more competitive, but excessive depreciation can lead to higher import costs and inflation. Finding the right balance is a delicate task that requires continuous monitoring and policy adjustments. Digital transformation and financial modernization are also beginning to influence Vietnam's currency landscape. The rise of digital payments, fintech innovation, and potential exploration of central bank digital currencies could reshape how money flows within the economy. While these developments are still evolving, they may have long-term implications for exchange rate dynamics and monetary policy effectiveness. Furthermore, Vietnam's growing integration into global trade agreements continues to shape its economic trajectory. Participation in major trade pacts has opened new markets and increased export opportunities, reinforcing the country's position in global supply chains. This integration supports long-term demand for the dong, although it also exposes the economy to external shocks. In the short term, analysts expect the Vietnamese dong to remain relatively stable, with gradual adjustments rather than sharp movements. The central bank is likely to continue its managed approach, intervening when necessary to maintain order in the foreign exchange market. Stability remains a key priority, especially as Vietnam seeks to attract long-term investment and sustain economic growth. From an investor perspective, the Vietnamese dong presents a unique case. It is not a highly speculative currency, but rather one characterized by steady management and gradual evolution. This makes it attractive for those seeking stability in emerging markets, although it may not offer the rapid gains associated with more volatile currencies. For businesses operating in Vietnam, exchange rate stability provides a predictable environment for planning and investment. Companies can manage costs more effectively and reduce the risks associated with currency fluctuations. This predictability is one of the reasons why Vietnam continues to attract international businesses. As we look ahead, the future of the Vietnamese dong will depend on a combination of domestic policy decisions and global economic conditions. The ability of Vietnam to maintain strong export performance, attract investment, and manage inflation will be crucial. At the same time, external factors such as global interest rates, trade dynamics, and geopolitical developments will continue to shape the currency's path. In conclusion, the Vietnamese dong exchange rate reflects a broader story of economic resilience, strategic management, and gradual integration into the global financial system. While challenges remain, the overall outlook remains cautiously optimistic. The currency's stability is not accidental, but the result of deliberate policy choices and a strong economic foundation. That's all for today's in-depth analysis. If you want to stay updated with the latest developments in global currencies and economic trends, make sure to subscribe to the channel, like the video, and stay tuned for more professional insights.